video of how you can catch catalysts before the crowd. We are currently focusing on insider trading, and I'm going to show you how you can use it to your advantage. If you look at the last video, we talked specifically about filings in the Form 4, which our system catches that are option grants vesting immediately. Today we're going to head over to restricted stock units vesting immediately, which is basically the same thing. And we have a case study which the system flagged of how you can actually look at the market and find these investing opportunities, and I will show you how they propagate in a real world scenario. So this is our site. Let's head over to my Streamlit dashboard. If you are unaware of how our service works, it's that we send emails, automated emails, as soon as a filing comes out that flags these sort of catalysts. So let's say a Form 4 was filed where our software flagged that option grants were granted and they vest immediately. Our system flags those filings and sends them right to your inbox with the description, the name of the stock, and the link. And I'll show you how the email format looks as well later on, and it can be seen in our other videos. So let's talk about how this propagates in a real world scenario and how you can actually find it. So this is dated back 11th July. MOBX filed 3, 4, 5, 6, 7 Form 4s in which they granted their employees or directors restricted stock units, right? So then you have to go back to the actual report, which should be here. So I mean the filings from the company. So you go up to MOBX. The emails have a direct link to the filing, but this is using the Streamlit dashboard. So let's go to the insider trading report. As you can see, 131,000 securities were granted to a director, and those were RSUs, and 90% of them fully vested upon grant. Right, so keep this in mind. He was able to exercise the stock options, not the stock options, the restricted stock units, as soon, like 90% of 131,000, as soon as they were granted to him, meaning he could sell them. Next up, we have options. He was also granted options, which are also fully vested and exercisable at a price of 4 and 6. So as soon as he got those options, he could sell them and exercise them. There is not one, but actually 6 or 7 of these reports where they have different kind of footnotes. This one 50% vests on August 20th, the RSUs, but the options are fully vested and exercisable. And you go on, you look for all of these employees. This one was only granted RSUs, 90% of the award fully vested on the grant date. This one should be similar. This one has stock options and RSUs, 90% RSUs fully vest on grant date, options all vest and are exercisable on the grant date. And as you can see, there's like 7 of these reports. And what is this supposed to mean? This is supposed to mean that it can either mean two things, right? You need to look at it from a perspective that they were given stock options and restricted stock units, and they could exercise them at any moment. This is very unusual if you look at compensation wise, because compensation wise they usually vest 25% or 25% each quarter. They vest 1/8 each month. They have these different very usual patterns, and this does not fit any of them. And you see the pure amount of these insider trading reports. You really have to kind of filter through all of the emails we're going to send you And if you find a bunch of these insider trading reports with fully vested and exercisable RSUs and stock options, it should kind of give you perspective that those directors, employees, they know that something is coming, right? And of course, there is probably scenarios like these where the stock does not actually have a positive catalyst upcoming, or actually have insider information, right? But in that case, that should just be pure compensation. And pure compensation events or reports do not look like these. They do not have in the footnotes this this unfamiliar pattern as we can see. This is something very unusual. And if you go actually look at the stock price after the 11th of July, in which people were granted the stock options, they were granted them at, let's see, so they were granted 11th of July, and as we can see, the stock rallied up around 65% in, I would say, 10 days. 10 days, right? And if you go to look in the, if you go look at what could have possibly caused this uphill, it's in this Schedule 13G filing, which is when a firm needs to report that a shareholder has exceeded 5%, the level of 5% or more ownership or stake in the firm. So if you look, where is it? There you go. It's I checked, it's Sage Hill Investors. That is a hedge fund, if I believe, and they have 3.1 million shares, and they own 6.1%, which is over the 5% threshold that you need. And as this is a hedge fund, what could this mean, right? There you go, it's here. This means that for investors, also for the, I would say, retail investors, you see, like, this is a hedge fund who believes that this stock has value to it, right? Because if they're placing their money in this stock, you classify their money as smart money, and that's why kind of it's a positive catalyst for retail traders. But our edge is the time edge, right? Because by the time that 13G was filed, which is, that's the wrong document, it was filed on the 23rd of July, which is right here. You can see there was 13 of July, 23 of July, 23 of July. Of course, it depends on the time, but as you can see, there was still like a 20% rise in the price. This can be due to many factors, but our edge is the time edge. And what I wanted to get to you is that, logically speaking, you have 7 insider trading reports with RSUs vesting immediately, and stock options vesting immediately, with a compensation far away from the usual compensation plan structure. And just as smart money is coming into the firm, that's the wrong document again, just as smart money is coming into the firm, so it kind of leads you to think maybe these directors or employees of the firm, they did actually know that smart money was going to come in. And as they knew that, as they knew that they were going to invest and that would drive the stock price up, they placed their trades below or just before smart money entered the stock, right? Entered into the stock. So it kind of leaves you to think that that's very unfamiliar, and there is no way of you to be certain, right? Because at the end of the day, when you do exercise securities, you need to also file a trading report that's again the wrong document, that you exercise those securities, right? And this is reporting for the 5th, so this does not, neither does this. But at the end of the day, there is no report saying that they exercised them. It leads you to think if it's a coincidence, or is it really a pre-thought kind of action taken from the directors of the company, but which is highly illegal, as you need to report when you exercise those options, and that is not done here. Well, and legally speaking, that should mean that they did not sell those options or exercise those options at this price level, and they're still keeping them up until now. But you know, all of these uncommon kind of patterns seen with money stocks, like we talked about in the previous video with LGVN. This is another stock I'm looking for with a similar pattern, but that's for me, for my sole investing, and for the investors that use NotifyMeEdgar. And this stock as well, it had a very similar kind of thing where director was granted stock options, vested immediately, stock went up 40% just before a catalyst, which was the FDA approval for a phase 2. This was covered in the previous video. So it's very similar for MOBX. And when you see these patterns, like, you need to analyze them yourself, and we provide you the kind of the information that you need to go more in detail yourself to actually find these things, because we cannot find them to you. I may be looking for them, and as part of the product, I could be sending you emails saying, look at this, and that could be done in a Discord group separately, right, for other subscribers. But our our service provides kind of like big range of these trading reports, which are actually more detailed than these ones, because in these ones I do not filter out as well as our actual system does. So you would have to kind of look for, you would have, let's say, 20 of these, and you would have to look at all of the footnotes text and kind of come to a conclusion yourself of, is it really a pattern? And that knowledge you can derive from looking at our videos and learning from this. So yeah, that was another instance of this insider trading. So yeah, and if you want to buy our service, you head over to NotifyMeEdgar.com and you can get a product sample for a phase 3 trial for free, or you can get alerts with us choosing the type of membership you want, and this comes with a daily momentum report. And I can also tell you that there are some catalysts that are very kind of in a way not bad, but it's noise, right? Maybe it's what you're looking for, but it's a lot of noise, such as executive departure, and what else? Mainly executive departure, and maybe merger and acquisition. It's a lot of an earnings release. It's a lot of noise. So if you want to say, you buy the premium plan, you're right. I want to have all catalysts apart from right? Or if you do actually buy all catalysts and you see that you're getting spammed, you can always send us an email through contact. Write in your name, your address, subject, technical support. You write here, I want my email to only receive And that's basically it. That's it for today's video. And yeah, subscribe and let us know what other types of videos would you like us to do.